What's going on? How are
What's
you?
going on? Good. I just met with Luke.
Oh, really? Okay, cool.
Yeah.
Is he in New York right now?
He was just in our office. Yeah.
Gotcha. Cool, cool. So,
So
so I used to be a Benzinga.
I know. He used to be a Benziga too. He's not there anymore.
Yeah, I know. Right? He's on the sabbatical, right? So
Yep,
we'll see what happens with that. But you are based in New York, right? Full time.
I am. Yes.
Gotcha. But you're initially from Denmark, right?
I'm originally from Denmark. Yes.
Okay, gotcha. So basically the way this works, and I don't know if Rachel's been my contact there at Public forever.
Yeah.
Uh, did she kind of run through anything in terms of how I was going to do this or the things that I was going to ask?
A little bit, but let's take it from the top.
Yeah. So really at its core, I've already started recording this, but just kind of introduction, talk about, kind of your entrepreneurial journey, early days, public, things that you're working on, focus on, maybe some tips at the end, but that's pretty much it. Sound good?
Yep. Sounds good.
Awesome. So, you pronounce your name Jannick, right? Is that correct?
Yes.
Okay,
Yes.
gotcha. Okay.
Honestly, I mean, yeah. In Danish, it's Jannick, but
That's
I
what I
react
thought.
to anything.
That's what I thought. I
In
always thought it
America,
was
it's more Jannick, and then in France, it's Yannick, and so it depends on I localize, I
okay,
adapt.
gotcha. Okay, cool. That's what I thought it was. Okay, so how was it growing up in Copenhagen, and what were your early experiences engaging with internet, technology, and design like? How did that really kind of inform your interests, kind of how that carries to today?
Yeah, it did a ton. I sort of grew up, you know, building my own computers. I should say, first of all, I grew up very excited about gaming,
Sure.
really just called video games at the time, and now I guess you call it gaming. Starting from the early Nintendos, eventually moved on to play Counter-Strike. Fairly competitively, although at the time it was sort of like the mass prize was like $1,000 at some event. So, it's not like how it is today. It's developed into a fully fledged sport, obviously. But I think by way of that, spend a lot of time in front of the computer, and you can't be gaming 24/7, right? Because then you'll get a little so when you're not gaming, you're just like there hanging out online with folks. And me and a couple of others started to get really excited about building websites. Um Really mostly to like solve kind of problems like meetups of different kinds, like meetups for like a Counter-Strike match, for instance, was one of the first kind of websites that I built. And I was always I did some front end coding, but I was really more on the design side. I was also just really into like doing this abstract art in Photoshop and stuff, and like on some of these online communities that I think still exist, but are now 20, 25 years old. So really started there. I was probably 13, building my own computers, buying my NVIDIA, kind of saving up money to buy the NVIDIA kind of graphics card and like putting that in order to do great graphics and have a great gaming experience. So it's been kind of funny for me to see NVIDIA becoming the most valuable company in the world, because I remember when you would go down and actually buy the graphics cards and like assemble your whole mainframe around your computer around it, which makes me feel old saying that, to be honest. But yeah, that was kind of how I got my start. And then from there, it kind of evolved to just building websites for companies, smaller businesses. And really, the design thing I just always stayed with. And as the design sort of world evolved, I did Macromedia Flash back in the day, which now I think Steve Jobs famously killed that because he didn't put a driver for that on the iPad. So that
Gotcha.
effectively killed that business. But that was all the rage at the time. Obviously, that evolved into kind of many different things, and even today, I'm still very, very heavily, deeply involved in um, all the pixeling work, even all over Figma. Spent probably a good chunk of my time just looking at web and mobile designs, kind of all the time. And I really enjoy that. So I would say design has always been kind of my thing, but I really just stumbled into it from I was an early teenager, mostly because I wanted to design to solve some other problems.
Yeah.
And then eventually that led to me just finding the design process so incredibly rewarding and interesting, and fulfilling that you just stayed with it and really worked on those skills my whole life, to be honest.
Yeah, I'm actually curious. I've talked to people who maybe are, in film and stuff like that, and they talk about how, when they're watching movies, they pay attention to, small details like what are people wearing, what are the brands, all these kinds of things or whatever, instead of just kind of like grabbing the most of like whatever the context is altogether. So when you're being exposed to different platforms and stuff like that, are you kind of looking or zooming in on those details? Is that kind of like the first thing that kind of grasps? I'm just wondering.
Absolutely.
Yeah, yeah,
Absolutely. 100%.
yeah,
Yeah, you definitely view, even just when I'm with friends, or I definitely, like, if I download an app, I always view that for a very specific lens. Like, you always think a few layers deeper. It's like, okay,
yeah, yeah.
why did they bring me to here? Why was this interaction like this? Like, yeah, totally. You can't help but notice all those details, and you're trying to find kind of the meaning in it, and you're trying to like distill it down to a sort of lower level where because you wanna get the full understanding of it. Just that, I think, just comes with the territory if you're in design and you have just a little bit of curiosity in you.
So I'm curious, how familiar were you with kind of how internet was progressing and so on outside of, your small town and, and how was it in relation, right? Was it kind of like on par? In Denmark, I think I've seen you on podcasts or talk about things were actually pretty advanced back then. So
Yeah.
I'm curious, what were some of the big differences, or was it pretty much on par with elsewhere in the world?
Yeah, Denmark and Sweden, I think, were some of the first countries in the world to have just like broadband for everyone.
Sure.
So super fast kind of dial-up, and we didn't really know it at the time. I mean, I didn't follow really global affairs when I was 13 years old, so I had no idea what Silicon Valley was or any of that. So the answer is very, very little. I had no idea and yeah, I guess that was right. I guess I was 13 in the year 2000. So basically, I had no idea the dot-com bubble was playing out right in front of me. I sort of remember my older cousin was like 7, 8 years younger, him talking about it, but I never followed it myself in any way, shape, or form. I just was excited to buy the NVIDIA graphics card because I knew that was the best one, and you were waiting for these things to come out and the GeForce, this and that. And so yeah, it's kind of funny for me how this all is kind of full circle now. And honestly, I wish I'd paid more attention because I think there's so much value in living through a bubble. And even if you're on the outside, just like experiencing it, consuming all the media, all the content, all the commentary around it for when it inevitably happens again. So, I was 13 years old. I'm not going to beat myself up about it, but if I could go back, I would probably have tried to pay a little bit more attention. But then again, the internet wasn't really what it is today. Media isn't what it is today. It wasn't really getting those stories from the Valley or really anywhere in the US or anywhere in the world, frankly. Um, yeah, there was no clear kind of outlet for that, right? It was still Web 1.0 at the time, and so really, you're just mainly talking about static websites. You're not talking about this very dynamic internet that we've evolved into today, where, the news essentially kind of come to you. Like, even if I were to seek it out, it would have been very, very difficult, probably.
It's kind of funny. I think about things like the parallel. I think about like when I first heard about Bitcoin, it was like 2012 or 2013. And had I known at the time, but I was in high school, like I didn't know any better. It's just
Of
like
course.
whatever. But that's like the parallel that came to my head. But anyways, as you kind of so you're it sounds like you're very entrepreneurial, very technical from the start, but then you eventually get into kind of finance as a career later on in your teens, right? Around 17 or something like that. I think you went to
Yeah.
South Bank, right? So what age did you actually start that, and how did that shape kind of that mindset and entrepreneurial desire that you already had?
Yeah, absolutely. So, I think immensely is the answer. But to give some background, Saxo Bank was like one of the online trading pioneers of Europe.
Mhm.
Think about it, of like the Schwab trade kind of up Europe. And they built just a very, very fast growing company that was unconventional
Mhm.
for Danish standards. It was actually always referred to as very Americanized, right? They had like Jack Welch coming to their like annual kind of holiday party and giving a speech and stuff like that, who was like the largest CEO in the world at the time with GE. And so the two founders Kim and Lars have always been like very non-Scandinavian in their business approach and their thinking, which I think I really like that. But that was also the first time I was getting exposed to anything in the world of business outside of me just building a bunch of websites for like, you know, smaller kind of like, my dad's friends essentially and stuff like that, right? And so when you're thrown into that at 17, you just like a little bit default to thinking, okay, this is how it is. And little did I know I was joining one of the fastest growing companies in Europe at the time. I mean, I joined around employee number, I think it's 250, 300, somewhere around there. And 12 months later, we were nearly 1,000 people with offices all over the world. So I was 17 when we joined. Really, the only reason I got a job is because instead of sending a resume, I built a website about myself. So that sort of showcased some skills. And
Sure.
again, this is like pre-Squarespace and all the stuff. Like you had to do everything by hand. So like that was like a decent achievement at the time to be able to do that. And then I did one other thing, which is I read every annual report about the company. It's not a publicly traded company, but they've always been a pretty transparent company. And in Denmark, most private companies even have to, you can find the annual reports, like it's all pretty transparent. And so I read all those, and then I went for an interview with HR. And the HR people, and I knew the business and better than the HR people, it seemed, right? Because the HR people, they're actually not deep in like exactly where, what the revenue drivers are and what the real growth drivers in different markets and da 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 da, because they're just doing HR and they're kind of doing a million different other things. And so as it happens in these like slightly larger companies, but at the time, again, I have the naivety of just thinking, well, every single person in the company understand exactly what the key KPIs are and like what drives growth and like anything else. That was obviously not the case. So I think when I came in there, I was able to put on a fairly impressive performance just by like being super deep in actually all the numbers, as well as being able to just like have a resume that was a website rather than just your regular old Word file. And that will stand out enough that they offered me kind of a job, which was not really an open position. It was just like again in a high growth company, as it often cases, like, hey, we need somebody to do X, Y, and Z and like it was a mixed bag of a bunch of stuff. So I just basically came in, did a ton of projects, but it was super fun. I was sitting on the trading floor,
Okay.
not too far from the founder and CEO's office. So there were people there 24/7. And it became one of these things where I just realized, yeah, if I just pull a bunch of all-nighters, and like really work my ass off, like you can get ahead really quickly. And and so I was like, why not? And again, I was 18. I had sort of I hadn't gone to uni yet, but I was out of high school, so it was sort of a sabbatical in between. I have no family. I just have my friends that want to go have drinks, and it's like, great, we'll do that on Saturdays. On the other days, I'll just work,
Yeah.
because in a growth company like that, there were so many things that you could do. It's like, and so I decided to be just like try to get through a lot of it and really work really hard. And opportunity was all about, and it was a huge privilege to be part of that journey and kind of see that. And Because I think maybe if I'd gotten my start in a more conventional, larger, publicly traded, slower company, I would maybe not have been infused with the same sort of like um, aggressiveness and like how I think about speed in business and just work ethic, quite frankly.
Sure.
And so I think in terms of my entrepreneurial journey, like that's definitely where it's a founder-led company at the time, right? When I was there, few hundred employees. So, there was some scale. I think General Atlantic had just invested 100 and something million, which was a lot of money back then. I mean, it's still a lot of money, but for a European company back in 2005 to raise that kind of money, like that's a huge, huge, huge deal.
Mhm.
Um, and so like yeah, it was just fantastic to be part of that journey, and I think that definitely put me somewhat kind of on this path.
Was it common, at least around your peer group to be getting involved in businesses like this at such kind of an early age? I mean, it's kind of uncommon here in the States, especially like, to work like that, from high school or something like that.
Yeah, not at all. Everybody thought it was super weird. I mean, people thought it was cool
Yeah,
because
yeah.
like, but it was like one day I like show up wearing a suit, meeting up with friends, you know, and they're
Sure.
like, "What are you wearing?" It's like, "Yeah, I wear a suit. I work at a bank now." Like, why? Because like Saxo was an online bank, but it's like before, way before fintech, so like everybody was suited up. There was like a level of etiquette, which I loved at the time. That was like great. Let me go buy a bunch of suits. And yeah, it was definitely unconventional. I haven't really heard of a single other phenomenon other than, funnily enough, I think Live, my co-founder Republic, has a similar story from the advertising world.
Sure.
And that's kind of one of the things we really kind of connected on when we started to getting to know each other, whatever it is, 15 years ago, of having sort of like a similar professional upbringing, just in very different, like finance and advertising, like very two different industries. But the way we approached things, the way we sort of like the size of companies that we worked for, like pretty high prestige companies, but like up and coming companies, high growth companies, and being in there and how you set yourself apart from an early age, etc. And I think to this day, this has a lot to do with how we think about uh, development of the talent that we have at Public, the culture here, quite frankly. Um, and so I think that was sort of a little bit of a meeting of the minds. But yeah, no, it's other than his story, I actually have can't really think of anyone else that like got started that early. And I still think it just goes back to like when you build your own resume as a website back in 2004,
Yeah.
2005, like in Europe at least, like at 17 years of age, like that kind of stood out. And you know, it was a, if I dare say, it was a very nice looking website too. It was not some shitty, it didn't look like Craigslist. It was like pretty well designed. I also put a lot of time into it. It was like pixel perfect precision.
Is it still out
And
there? I'm just curious.
oh no, no, it's not
No.
out there. No,
Okay.
I don't think so. They say the funny they say the internet is forever, but it's really not because once you stop paying the hosting bills, these things kind of
Yeah,
go away.
yeah.
And it's so early that I mean I guess Google would have indexed it, but maybe not really. I doubt you'll be able to find it.
Curious, with any of the people that you were at Saxo Bank, did they also go on to kind of like do kind of big things and start their own companies and stuff
Oh
like
yeah,
that?
for sure. Oh,
Yeah.
huge. There's definitely like Saxo Bank was definitely like the Danish kind of fintech version of the PayPal mafia a little
Yeah,
bit.
that's what I was thinking. Yeah.
Oh, for sure. There are so many people that have gone on. I mean, actually, so my next company was when the global head of sales and like the CIO, CTO type person sort of left to start another company. I then went with them, and that was another huge leap of faith because Saxo was this rocket ship. But I think I just saw like, wow, here's an opportunity to really get in on day zero, like the ground, like literally like go down, buy a computer, assemble it, and then
Yeah.
get to work, like really starting from scratch. And I think that was so appealing to me, just to, like to have that type of experience. I was thinking a lot about the upside, that would be involved with that. And those were the next kind of 7, 8 years until that company got acquired in 2016.
Yeah.
And then by a publicly traded company in London. And again, built that company to, I don't know how many we ended up being, 100 something employees. And but it was more like a B2B business. So a lot of salespeople, different places around the world. And then after that, it was like, yeah, okay, now I really feel like that I wanted to kind of do that again. And then I moved to New York, which for me was this thing of that other company. I was sort of between Copenhagen and London.
Sure.
And so I was spending a lot of time in London kind of before going to New York. And London actually at the time, I was actually the fintech home of the world, I would say. I would say that was like the main hub. Like I remember very vividly this front page article on the FT that and obviously it was the FT, so but they said like London is now the number one fintech hub in the world,
Yeah.
but they had some data to back it up in terms of job openings and this, that, and the other. Obviously, like if you factor in, you know, the market cap of the PayPal's of the world and stuff, maybe not. But in terms of job openings and generally, London had a lot of things going for it. Then the Brexit vote came in that summer,
Yeah.
and you know everything like there's just so much uncertainty that came with that. And if you want to destroy kind of a really good thing, that an industry has going for in a particular city, you just like bring in this like huge new like uncertainty, right? So suddenly, as a European, I didn't even know if I could keep living in London.
Sure.
So I was like, well, if I'm gonna get a visa anywhere, it's gonna be New York because that is the major league. That is the, you
Finance
know,
capital, right?
yeah, finance capital of the world. I always call it the Champions League of finance. Like that's where you want to play. I'm a soccer guy mostly
Sure.
at heart.
Sure, sure.
Although I can't believe I'm calling it soccer. Actually, that shows how long I've been in the U.S. now. But um, but yeah, and so did that, and then a couple of years after moving here, public started to take form, and the rest is history.
But before public, and then you had the exit, and then before public, you took some time off, right? And you kind of just worked on some
Yeah,
things. Yeah, what was that?
I honestly did it mostly just because at the time I'd been working for 12 years nonstop. Um, and I missed and I learned a lot about business and everything that comes with scaling and growing a business. Um, but I had spent also very little time on design. I've spent some on product, but even less so because as a B2B company, you're mostly doing kind of sales, right? It's hard to be like a product like you have to as you go out and do a bunch of sales, right? And so I was flying around the world all the time, and so it was like, and so I missed going back to just design and product, and I felt I needed to own my skill set again, and I felt I needed to get back to that, and it was something that I wanted to do out of, I guess, passion, for lack of a better wording, but I also an intrigue and curiosity, but I also was like, I don't want to just like think and assume that I'm still a great product person or a great designer because I haven't been in the ring for a while, if I'm being honest with myself. And so when I went to New York, what I did is like, there's nothing better than learning by doing. So I just started talking to a bunch of people. Can I help with design projects? And at that moment, it was fortunate for me less about the money. It was really more about like, give me a real problem that I can solve because that is kind of how you learn. And then I just got back in that mode of being in front of the screen 24/7, talking to some of their users, like doing all the product work, doing all design work, and did that for a few apps. And then they started getting featured by Apple. And then I was like, okay, maybe I still, or maybe not, I still got it, but maybe I now have it again.
Yeah.
Like maybe, and then it kind of built up your confidence. And then after that, then I was so in design mode. And by when I say design mode, I think fundamentally design is about problem solving. Like, yes, things should look and feel nice and they should be delightful to use and all that stuff. But at the root level, design is about problem solving. And so once you've put those glasses on, you can't help see problems anywhere. And that just means that you exist in this mode of like just a plethora of all these like potential opportunities that you can kind of address.
Yeah.
And then I had one moment when I had to like invest my money with a traditional bank here that forced me down to a branch, had me send an email, and I was like sending them email like I want 20,000 on Netflix and 10,000 on Disney and 5,000 on this, like all these round numbers. And they'd call me back on the phone and it's like, yeah, and like read out the trade confirmation with all these odd amounts because that's obviously yeah, you need to buy full shares at the time, right?
Yeah.
And that started to be the idea for this fractional share trading concept that I think Public was sort of the first to really do that in a sort of real time mobile kind of format. Because then I started to think, okay, there's got to be a better way to do this. When we found that there were, because you can actually own a fraction of a share. I mean, obviously, if you own two publicly traded companies and they merge, you can end up with a fraction of the shares. So it had more to do with reporting. And basically, that was generally treated as an exception. And we then built some tech to make it more like the rule.
Mhm.
And if you did that, then I realized that you could change the entire user experience from being doing all the math of like, I want this many shares of this to your portfolio composition could just be that, right? Similar to like a Venmo at the time, which was like the number one app in the App Store at the time. We just punch in $100, hit done on a stock, and that's it. You're in the stock. So that was just like a much simpler way for a lot of people. It helped also people who like Amazon, Google, like these stocks were trading at several $1,000s price per share.
Yeah.
So if you wanted it to be, if you had a $10,000 portfolio, Google would have to be 0, 20, 40, 60, or 80%. It couldn't be 10, couldn't be 15, couldn't be 7, right? And so that also nagged me because then you didn't control your own portfolio composition. It made it really hard to rebalance your portfolio. It made it really hard to dollar cost average. So there was all these investing strategies when I'm reading Buffett and I'm seeing all the tips for how to like really invest and everything that I've learned about investing up until that point in my career, I couldn't apply it, right?
Yeah,
Because if you didn't have millions of dollars, it's actually you can't rebalance your portfolio every week if you want to, if you have 100 names in there and like really have that granular level of control. And I wanted that. And that's why I did it that way with a big bang. And then basically when that was the experience I was met with, then I went back to my design program and just started doing mockups.
gotcha. One thing when I started at Benzinga, this must have been early 2019, and back then I couldn't get a job at a bank, so I was like, let me just hack my way in, so I'll be like a journalist, right? So I joined Benzinga, and the big narrative at the time was, kind of the Robin Hood, you got public, and it's really, and you talk about this yourself, it's like, you kind of want to take control of your own finances and stuff. So it's like this shift in like generational trust from like institutions to peers and self-research, right? So I feel like that's a big core part of public's thesis as well, right?
Yeah, 100%. Absolutely. I think generally when we look at the space now, the last 10 years, so I think there's always this overarching trend of like leveling the playing field, if you will, between sort of institutions and individual investors. The last 10 years mostly have been about doing that through access.
Sure.
So zero commission, fractional, right? So now and then fractional ultimately like we launched fractional treasuries and we even have fractional corporate bonds now. So like really across different kind of asset classes as well.
Mhm.
And now we're at this interesting inflection point where not all, but most sort of asset like really large asset classes have been fractionalized in some way. Retail have access to those now. So now they can buy anything they want. Now it's the question is what should they buy and why? And that's where research comes in.
Sure.
And that inflection point is happening right now at the same time as we have this uh, step change in AI, obviously. And so we started experimenting with because we've been investing in like our own research capabilities for a while,
Mhm.
but public premium. We've always like you can see full financial for any company in the app. Like we decided early on, let's just like build the best mobile product for analyzing an income statement or balance sheet, hands down. Like no one, right? Like a little bit like how you might say TradingView are the best charts for technical analysis on the web, right? We saw like a little bit of like a gap in the market to be like, okay, nobody actually has a really fantastic mobile experience for going through a set of financials in just like a very, very well crafted, kind of beautiful way. And so we're like, let's own in on that. But then when ChatGPT, I guess 3.0 came out, um, uh, as well as with many others, kind of captured our imagination, and we started kind of playing with that. We got fairly early access to, I think, 3.5.
Mhm.
And then we started tinkering with this intersection of research and these LLM interfaces. And where that's led to today is we've got alpha inside the app. So basically, you go on any stock on public, you swipe down, you ask any question you want about the stock.
Sure.
And it'll just give you the answer immediately, right? It'll scan all the earnings files, it'll look at all the financials, it'll do all that stuff, analyst ratings, this, that, and the other. And if you then think about that, that really means that like the process of researching a company, it just is so much faster.
Mhm.
It is so much higher quality. We've been able to really do a few moves to drive hallucinations to basically near zero, which means you can just trust generally the content that comes out. Whereas generally on the web, you still have to like, oh, wait, they say this and they say that and this, that, and the other,
Mhm.
across different sites. And so that has been one of the most actionable pieces of technology that we built in terms of like the correlation between users actually um, using it to make investment decisions. And we've had a number of things. We've obviously had our news feed. We've had some social features, which were obviously big in 2021. And then actually they've now more and more become cannibalized by this AI feature because I think social was good at a lot of the things that the AI is just now an order of magnitude better at.
Sure.
Um, and even think about things like if you ask a question to a community, like you gotta wait a bunch to get a bunch of answers. You gotta sift through the answers. You gotta consider the bias of the people giving you the answers. It might take an hour, it might take a day before you get a high quality answer.
Sure.
With Alpha, you have an answer in 5 seconds. And so we've even spun that out actually very recently, a month ago, to an app just called Alpha
Yeah.
in the App Store, which doesn't require you to like have a brokerage with public. It's basically just a watch list app. So think about it like an Apple Stocks, but with AI superpowers. So it you upload your watch list. You actually just screenshot your Apple Stocks, and then you just put that screenshot up. It auto follows all those stocks, and then it constantly scans those and tells you not just if they're moving, but why they're moving. And that's again, I think a good example of how AI can just add more depth to the research experience without requiring people to necessarily go so deep. And it just, I think, on the margin creates a lot more informed investors than than what we've been used to in the space.
Sure, sure. Now, okay, so Alpha, and what was kind of the main decision, or what was the main reason for like spinning it out and basically having it as a standalone? Was it just to, is it just easier to get more people and it's kind of like a gateway then through public indirectly, or how does that like, how do you think about that?
I think we realized that it's the first time that we built a product where, first of all, there was some UX, like it kind of makes sense to spin it out, right? It doesn't make sense for us to spin out the bonds product because like you want all your assets in one place, like that makes a ton of sense. And you want your research most of the time in the place where your investments are, but not always. And so that was like the key difference. And then I think we realized this is one of the most powerful things that we've built over the years. And again, when we look at the data and we see the usefulness of this, it's been way above anything that we've expected, quite frankly.
Mhm.
Um, and so we thought, hey, this really should get into the hands of more people. And we just saw a use case that, why should you use just a watch list app that doesn't tell you what exactly is going on, right? You can just offer this like 10x better watch listing experience if you infuse it with these AI powers where it scans your portfolio all the time for you and you don't have to you just get a push notification whenever something is moving and you know exactly why. You don't have to go deep on news articles or this, that, or the other. And so just opportunity for way more people to like experience that.
Sure.
And then generally it was like, yeah, like I said, the first product where maybe it sort of made sense from a UX perspective, that it could exist inside public, but also have a life of its own outside.
Got it. And you're not necessarily like you don't have to like pay to have an account or anything. I mean, how do you like kind of do you monetize that or is it just kind of like you're stale and you're just
No, I mean it's $1 a week. So like
okay, got
any investor that's investing that wants to use it, they can. At least that's sort of the introductory offer that we put out. I don't know that it'll always be there, but that's we like I said, we want a lot of people to experience it up front. So we put a pretty low introductory offer on it. It is free if you have a public account, but the vast majority of its users don't right now, and that's totally fine.
sure.
So really, it's more a tool for people to just be more informed about the stocks they care about. And there's also people that use it for like, hey, if you work for a publicly traded company, um, you're probably watching that stock in your Apple stocks, and you know when it's going up and down, but you don't really know why. It takes a while to dive in, and so here you get these proactive alerts, and then you can dive into them and just ask follow-up questions, and it lets you understand the movement of those stocks much, much better, even inside of a week or two of using the product.
In regards to kind of, public itself and deciding what assets to make available, you've got like corporate bonds now, you've got all these different things. What guides the decisions to have those different pieces or, make that accessible to people? I mean, I know you guys have like even alt investments or whatever. I can't remember if it was like music royalties or something like that that you can get exposure to.
Yeah.
Is that like an internal thing? You kind of just decide, or is that like a user-driven type thing, or how does that work?
It's a little bit of both. I mean, we have a vision and sort of a longer term roadmap of really wanting to bring all these assets into one place.
Mhm.
That's the thing that makes the most sense. That's the product that we've always wanted, because we think, especially in these markets over these past 20 years, that was have just become increasingly kind of volatile.
Mhm.
I mean, look at elections, look at the speed with which the rate environment changes, right? From 0 to 5% and record time and so forth. And so in that modern world, it is more important than ever to move with the market, meaning reallocate from equities to bonds to crypto to also this and the other, um, at the right time. And that doesn't mean you have to always do it before. I think there's a lot of data that shows that, like, hey, you don't always have to buy things at the very bottom and sell them at the very top, right? Actually, on the contrary, for most people, the smarter decision is just like move with the market. Don't be the first to do something, but don't be the last either. But if you do that and you like you take care of your portfolio allocation across asset classes over time to get a little bit more return out of the different cycles in the market, then you'll just do better over the long term. And so for us, that's always the product that we wanted, and we've built that for ourselves. And so we generally have that as a vision and a roadmap. Now, the sequencing of all the things on that roadmap, that's where user feedback plays a little bit more role, like which comes before the other. Obviously, the market cycles as well. So, to give you an example, we had a pretty good hunch, when well, at the end of 2021, well, how we had a point of view, I would say, on how the rate market was going to develop.
Sure.
Um, and uh, and so we decided to say, hey, let's start looking into fractionalizing treasuries. And as a result of that, we were the first to come out with the ability to just buy a 6 month T-bill with any amount of money on your phone in seconds, and launch that at a pretty good uh, time in the market. And it became the most acquired asset of 22 or 23. And so, like, the market cycles and like having a little bit of point of view in the macro world on what's happening drives also kind of where we see the sequencing of that roadmap happening. But in the fullness of time, there is a long-standing vision to kind of try to bring all the sort of public markets that make
Sure.
sense for folks to invest in into one experience.
When you're talking about like kind of, fractionalizing stocks, bonds and stuff like that, the other side of that trade, if I mean, for lack of better phrasing, who's kind of like warehousing that risk kind of, right? And as you're breaking it down, obviously you're getting exposure, but who's kind of on the other end of that, kind of holding on to those bigger pieces?
Yeah, so a bunch of different partners actually, and I think one of the things that's unique about the tech stack that we've built, I think the sort of Silicon Valley tech MO stories like vertical integration, et cetera, et cetera. Vertical integration stock market is very hard. Like nobody ever is going to be fully vertically integrated because then they would own the stock exchange and the clearing and the broker. Like that I don't think that we will see that in our lifetime.
Mhm.
So we've done something else, which is focused more on like building a horizontal layer that can actually work with different clearing and custodian firms under the hood. The user doesn't have to really care about that because what they care about is the fact that they get real-time money movements across all the asset classes. They get consolidated performance reporting. They get cross asset tax optimization. And like really, so we've built that layer that kind of fractionalizes all those across multiple clearing and custodian partners so that our users don't have to like I say, have all those accounts. And then we're the broker dealer, we're sort of the regulated broker dealer interface, which obviously is generally the client facing
Sure.
um, kind of company in this particular value stack. And that model for us has just proven to be great because it means that we can scale a little quicker. It means we take on less risk as a firm. Like we don't really have the kind of risk that you would have if you run your own clearing operations. I mean, most folks would remember with GameStop what happened to certain players where, they were clearing their own flow and that can there's a lot of downsides and risks that kind of come with that. And we've never really been too passionate about going there and solving those. We're much more passionate about delivering on that vision of like give me one account or well now multiple account types, but like basically one login where I can have brokerage accounts as many as I want. I can have RAs, trust accounts, corporate like whatever other stuff that you want. Get all those account types in, all those assets, have all that work in just a super smooth experience. That's really where I think we've always seen the main product vision be, and that's what we're still focused on delivering on.
Got it. And then I think last year, I mean, I'm just kind of looking at you guys were launching multiple things every single month, basically. So how do you kind of sustain that pace? And what are some of the big things? I know it was like Alpha. Was that launched last year? Or
Yeah, yeah.
yeah, yeah. So how do you sustain that?
We continue to work really effing hard every day. No, but I'm in all seriousness, we have a fairly lean team. I think we have a culture of um really kind of hard work, but also being smart about things. I think we have minimal amounts of technical debt. I think most of the big players in the space, they rack up all this technical debt, which is basically when you have a bunch of code that isn't written in a way where you can easily maintain it or even develop it much further. And so
Sure,
therefore you sometimes have these situations where a large company has a feature and users is like, can't you just add this? And it seems very simple, but if you look at the code underneath, it's a bunch of outdated spaghetti code. And so people will be like, no, we have to rewrite the whole feature to add that thing then.
sure.
And that is the thing that kills product velocity. And so I think our CTO and most of our engineers are just really allergic to that. And I think because we've built that horizontal stack that nobody else has, it just allows us to move very, very quickly with minimal tech debt, like I say, and that really is at the core of our product velocity, I think, because that means that we can just react, yeah, very, very quickly to things in the market. I mean, I'll give you an example. So we recently launched index options.
Yeah,
And we had index options. We launched our options product last year, like in January last year, but we didn't have index options. And it was a requested feature we had on the roadmap for 2025. We'll get around to it. Immediately before Thanksgiving, we get word that Bitcoin options are going to come to market and be
yeah,
approved
yeah,
as index options. And we're like, okay, crypto's having a moment post-election. Bitcoin options, we've been following like, okay, when are Bitcoin and options gonna meet and shake hands? Because we thought that was going to be a fascinating thing.
sure.
So we huddled the entire team before Thanksgiving and we're like, this is coming out in 2 weeks. Can we get it done? And I think we got it done 2 weeks and 2 days.
Okay.
So I think, we've with GameStop, with COVID, like there's so many times in the history of this company where we've just had to have this like call to arms, kind of drop everything, kind of like you know, Oppenheimer kind of moment, but on a much shorter
Yeah,
time frame. We're like, we have
sure.
to deliver this now. But we tend to be in a great place to do that because we also have continued to, like I say, invest in erasing technical debt, not waiting 5 years to like rewrite the next kind of big system. Like we've had a pretty good eye on kind of doing that on a continuous basis. And when you keep your levels of technical debt low, you just gain maneuverability and product velocity, like I said.
Got
And so we literally shipped that whole feature in a little over 2 weeks, and brought it to market as one of the first players, if not the first player. So, and that's phenomenal because a big part of this business, to be honest with you, Renato, is like meeting the market where it is, but we can't always foresee where the market's going to go, right? If we could, we'd be running a hedge fund instead. And so it's sort of so we've just optimized for models like, hey, we can't predict the future better than anybody else, but we can be the fastest and the most nimble and the fastest to react when things are happening. And that is what lets us to be first to market with fractionalizing stocks, treasuries, corporate bonds with an AI product, you know, Bitcoin options, like whatever the case may be. And the business benefits a lot from that.
Gotcha. And with kind of you hear a lot about, the time period that we're in right now is potentially could be similar to what we experienced in the 70s, maybe just stickier inflation in general. Markets maybe don't do, stock markets maybe don't do as well, but you have things that kind of help you hedge against that. Maybe like, you can earn higher returns on your bond exposure and stuff like that. But
No.
I'm curious, do you guys have margin? You have margin now, right? As
We
well.
launched margin in last year as well in
Got it. So
Q4.
essentially, yeah,
So
you could, kind of try to stack returns there. Do you ever think about like creating a product, or maybe you already have this, I'm not quite sure, but where you could have something like a portfolio margin type situation, but you allow people to maybe, you know, you can outlay your cash, but then you can have more margin intensive positions, right? Maybe something like bond and try to stack exposures like that. Do you ever think about maybe creating a product around that or no?
so you mean like a product where you do basically cross margin across all the assets, or
Yeah, yeah, cross
is that what you're
margin
referring
or
to?
like offsetting positions too, or one position might offset another and
Oh,
with
got it.
the
Yeah,
market requirement.
yeah,
Yeah,
yeah, yeah, definitely. I mean, I think that is where we want to go with the margin product.
sure,
And I think across some of the asset classes, we have that already. So across bonds and equities, crypto, a little bit different, exists in a little bit of a different regulatory kind of framework. Um, and hopefully there's some more clarity to come around that
sure.
in the near future. But I think that's definitely where it's going. And again, I think ultimately most of these developments really just always end up being in the favor of customers, right? What our members want, like that's really what drives innovation, and that's the same for many other firms. And so that also is what changes regulation over time. And I think if you go all the way back to, Schwab in early days, right, with a discount brokerage, where trades were $75 a trade, discount brokerage, like there just continues to be delivered so much value to investors, which means that more and more people can participate in the market, and people can participate in the market in a better way, which we think is another huge part of it. And I think this is exactly a feature that fits that MO, because we often talk about internally like democratization is great, but it's also about making sure that the people that are invested in the market have every opportunity to grow their wealth. And so that means, and that's at least as core of a part of our mission, because that goes back to research, that goes back to building the smartest features. And we do have a bunch of stuff up our sleeve for 2025 that I can't quite talk about yet, but that fits this sort of MO.
I kind of want to go back into kind of what's driving some of these trends. Obviously, having easier access to markets, cheaper access to markets, obviously enables, more participation and stuff like that. But this whole dynamic around like wanting to do it yourself or, doing the research yourself, surrounding yourself with people who are doing it themselves as well. Where is that kind of coming from especially with this like Gen Z and millennial generations? Where do you think that kind of stems from?
I think it comes from, if you look at how they grew up, right? Um, you grow up with access to the internet, social media. Like I said, when I grew up, I was hard pressed to find any news about any stocks anywhere or any tech company in America or anything like that.
Mhm.
And today, you got so many news outlets competing to feed you that information, and you don't even know who to trust and who not to trust. So, like, the entire model has sort of been flipped upside down. But that all just means that you're dealing with a bunch of folks who were forced to build financial literacy way earlier in their lives. They had many more resources and tools available to them. So it's not just, you can decide now, like, do I want to read news in the paper or do I want to go on YouTube? Or thirdly, do I just want to do it myself and learn by doing, because I can download this app in 60 seconds and get started, and I don't have to risk a ton of capital due to fractional shares, due to zero commission. So really, you just have all these factors that have primed the millennial and especially the Gen Z generation to just take matters into their own hands. I think on top of that, you can sort of add this layer of, I still think '08 was a really big deal
Sure.
in this country and in the world, frankly. Um, And if you think about, the average age of a millennial at the time where '08 sort of happened, I think it just caused some trauma and like some shock that I think is going to define a little bit how that generation thinks about sort of these old dusty financial institutions.
Mhm.
Um, and specifically, I think they will always be kind of repelled by them a little bit. And I think that means that folks were, I mean, there's been all these studies that also show people would rather invest with like a tech company than a financial institution, or just like the trust in financial institutions, similar to the way we've now seen the trust in the legacy media has plummeted. Like that's what financial institutions went through back in '08, right? What you arguably just saw with this election on the legacy media side. And so, you know, if that's your first impression, like you can never change your first impression.
Sure.
And so the first impression that any generation happens around anything is massive. That's why '08 was like, I think, left a lasting impression
Sure.
of these generations. And then right after that, what did you have? Finance going mobile, fractional zero commission, social media, like all, and like I said, all these ways where you can then now do it yourself. So it became a 1-2 punch of like, '08 happens, all the stuff blows up. I probably shouldn't trust anybody else with my money. I should probably do it myself
Yeah.
because look how all these other guys are doing. And then a few years later, I have all the tools in the world to actually do it myself.
Yeah.
And that became the simple 1-2 punch that I just think put this generation on a fundamentally different path than prior ones.
Yeah, and the whole thing is you taught I mean having access to home ownership and stuff like that. All this kind of stuff is so much more expensive, and I guess the whole narrative is now is like you kind of have to like take those bigger bets yourself too, right? And you
Yeah.
not, for lack of better phrasing, but like YOLO, and you saw a lot of that like 2021 or whatever, just like what's going to be the thing that kind of gets me out of this or allows me to kind of level up and be able to keep up with these kind of like these market cycles, right?
And by the way, I know so many of my friends that bought real estate that deeply regret it.
Yeah,
Even if you buy, and I'll put myself in that group, like if you buy at very low kind of rates,
yeah,
and at the time where you think, oh, this is like a good deal, it's like we should always look at what could you have done in the markets. And when I just pull up, a mix of SPY and the Qs,
hmm,
I'm like, come on, like what did I do here, right? Like, and so I think there are a lot of studies out there that show too. I mean, people can go on Google or YouTube and figure this stuff out. I think pretty much all the ones that I've seen come out when it's like, what's better, stocks or real estate? Almost all of them are like rent and put all your money into the public markets.
sure,
Um, and that's even if rents have gotten super expensive, which they have. Most of the studies out there still point to people who've put all their money in the markets and rented coming out ahead financially. So, but there is something about this old dream, and that's a little bit another dream that I think the boomers had with this, which is mostly a broken dream with millennials. It's like you want to own your own home and you don't want to do this, that, and the other. It's like for some reason it's like a milestone. Like a lot of people have it on their checklist. And I kind of get it from an emotional perspective. It is a romantic idea, but romantic ideas are seldom great financial ideas.
oh,
And I think that's exactly what you're dealing with here. It's a very romantic idea to have that house with the fence and everything. But the best financial idea has just been to go along the greatest wealth building machine of all time, which is the US stock market.
sure, sure, gotcha. As we kind of wind up here because we're almost at the top of the hour, but one thing I really want to touch on is like the whole payments for order flow conversation, which I think public was at the center of. I think you got rid of it maybe around 2021. It could have been like the GameStop situation or whatever, maybe around that time. But you do still have payments for order flow, particularly with options, I think, but the market structure there is a little bit different. And
Yep.
as a user on public, you get to kind of share in, you kind of get exposure to that kind of rebate or whatever it's called. And it's almost a form of price improvement, right? Is that kind of how you look?
Exactly. Yeah. So basically, the history is we decided pretty much right after games. This was an idea that we had for a while. We decided after GameStop to abandon payment for order flow. That means that we would all route all orders directly to lit exchanges. We thought that was a more transparent way of doing business, but we also thought that it was actually deliver a better outcome for our customers. And we basically proved that through a number of studies looking at speed of transactions, EFQ, like the quality of order execution, etc. People can go read about those if they want to get into the weeds. They're all on our blog. And so when it was time to launch options, so the options market structure, to your point, works very differently.
Yeah.
And you basically don't really have a choice but to do payment for order flow. But it
Hmm.
also works in a way where whoever's taken the order actually has to post it to a public exchange. And
Hmm.
so there is inherently more competition for that order. What we did not like about the payment for order flow model, the way it works in the equities world, is you can essentially just say, hey, I'll take the sort of monopoly on your order flow. And then you have to meet the bar, which is called the National Best Bid and Offer, the NBBO.
Yeah.
But the problem is the NBBO is somewhat outdated because it's determined by all the market volume at 100 shares or more. So it doesn't take into account basically most of the retail flow, certainly not fractional, but even all the way up to like 100 shares. And again, this was done before zero commission, before fractional, before
Yeah.
like this explosion in retail. So the MBBO, when retail was like 7% of volumes back pre-2020, was like not that broken. Then it went to 10, 20. I've heard that we're having days now where it's going into the 40s. And suddenly retail makes up a much larger part of the market, but the MBBO doesn't take that into account in its reference price. So sort of the hurdle that you have to clear is really a little broken, which means that some of these firms are basically able to say, hey, we gave you the national best bid and offer technically, but not really in spirit, because you might actually see a price that nobody else is seeing that might be lower than that.
Yeah.
And that's just not a very transparent model. We didn't really think that's gonna, you know, um, scale that well. And obviously, like the administration started also looking heavily kind of into things. Now, in the options model, in the options world, like I said, it is fundamentally a different market structure because you have to actually post orders to an exchange and people can compete for them. And so you get more competition for the orders, which drives better outcome for customers. And really, that's kind of the main thing that we've been focused on this whole time. Is like, can we like what delivers the best outcomes for customers? Because again, when we look at where most financial institutions fail in 08, it's not having their customers' best interests at heart. It's not being transparent about how things actually work. And so we always want to be the sort of antithesis to that. And that's how we ended up in this kind of payment for order flow affair, which took on a little bit of a life of its own, obviously. And then with the options world, really what we're saying, again, along the lines of transparency, is like, hey, we will give you part of our order flow rebates, and for our and there's a few tiers to it, but for the highest tier customers, you actually make 50%. So literally, what we make on your flow is what you make too.
Sure.
And so for those customers, it's just incredibly transparent, right? They know exactly, oh, this is how much money public made on my options because I made the same amount of money. And that's just like a refreshingly different incentive structure
Yeah.
that puts us a little bit on the same side of the situation. And it aligns us better with our customers. And that's just generally how we like to do business.
Sure. As we're kind of finishing up, two quick questions. What are you most excited about for public in 2025 and outside of public, just generally speaking, could be technology or whatever, where do you think is like the most amount of opportunity, right? Like let's say you weren't even doing public or you were just like,
Interesting.
where would you put your energy?
Don't worry, I won't say AI to both of those answers because that would
Okay.
just be too easy. But I will say probably, I mean, for public, obviously just having launched alpha, seeing some of the things that we have on the roadmap, I think there's immense opportunity there, and I'm very excited about that for this year
Mhm.
in terms of what alpha will evolve into and some of the AI things that we have on the roadmap.
Yeah.
Um, I'll caveat that answer with saying one other thing. Maybe we should have touched about this before, but I also think you're starting now to see the great wealth transfer play out. And
Mhm.
so the great wealth transfer, for those unknown, is the largest transfer of wealth in the history of mankind. I think latest numbers has it at $100 trillion, trillion with a T, mostly going from baby boomers to millennials, but some to Gen Z as well. And again, if you think about all the things we just talked about in terms of like how millennials and Gen Z is so fundamentally different in how they go
Yeah.
about their lives, but specifically with regards to investing, then boomers, a lot of that sits with financial advisors. I don't think that's necessarily going to be the case going forward. I think a lot more of it is going to be self-directed, and so that's just going to drive so much growth in our industry, but obviously also for public as a firm. And I think the great welfare is a lot of things have been talked about it. But the average life expectancy of a baby boomer in this country is 78 years old, and the oldest turned 78 last year. So now it is actually kind of officially underway, if you will, if you just look at the data. Um, then I would say outside public, just in the world in general, I am excited about um, the at a macro level, I would say, about the growth that I think collectively we, America as a nation, can deliver through all the different kind of initiatives, through this culmination of like, you obviously have like a lot of deregulation into it. This talks about tax cuts, which obviously is like great for earnings, which would drive valuations high in the markets. But then you have this arm swamp of AI, which also allows you to just like reach next level of efficiencies. And so I am really excited to really see what can happen there.
Hmm.
And then I think if, as far as like a business opportunity, I think that there's a lot of small firms, if I'm not doing public, um, and I just wanted to go and make a lot of money, frankly, because I'm not sure how intellectually interesting this work is, but I think there's a huge opportunity there.
Sure.
Go and roll up a bunch of old service firms, accountants, immigration lawyers, like this, that, and the other,
Uh-huh.
and really run those as AI first companies. Because I think that there is a lot of like I think it's going to be a long time before an AI agent is going to be able to run an M&A process, or something like that. Someone like the top tier sort of white collar work. But there's a lot of things here and there where in the old software days where you still had to write software for every specific applications, all these corner cases were kind of forgotten. Then they've accumulated over the years. So altogether, they're a big part of the economy now, I would argue. If you think like taxes, immigration, like those are two good examples. And with AI, you don't have to go and write software for every specific use case. You don't have to like foresee all of that. You can create something more fundamental that that solves it sort of in a totally different way without and therefore scales much better. And so I think a lot of those old service firms, I think, will have a harder time, obviously, over the next decade. But that's also why I think there's a big opportunity. Again, consulting firms, same. I think there's going to be a lot of that manual, like maybe basically all the manual labor intensive kind of industries. I think there's going to be a lot of alpha there.
Awesome. Awesome. Well, that kind of ties it up for me in terms of the big stuff that I wanted to ask you. Was there something else that you kind of wanted to mention before we kind of part ways, or I think we kind of covered a lot.
Yeah, I think we did too.
Yeah. Yeah. Thank you. In terms of finding you, you're on Twitter, right? LinkedIn, all those kinds of things. I'll probably
Yep,
link to that or
I
whatever.
am Twitter, LinkedIn, or x.com/Malling. Public.com. Go to betterwatchlist.com if you want to download the Alpha app. Um,
Is that
it is a
also
better.
web? Do you have a web platform
Not
too?
yet, not yet.
Okay.
It's just the domain is called Better Watch List because it is a better
Got
watch
it.
list than what you're currently using for sure.
Sure.
So,
Sure. Sure. But you might eventually have something like that, right?
oh yeah, for sure, for sure. And like public as a web platform where Alpha exists inside the public web platform. So yeah, it's not a far cry for us to think that we'll deliver some version of the standalone Alpha app on the web.
Got it.
Um,
Got it. And last question. That's built on top of like ChatGPT, essentially, right?
yeah,
Oh,
it's with
okay. Got
OpenAI, correct. We sort of, one of the early things we found is like it was obviously phenomenal language, like it's a language model. It wasn't always that great with numbers in the beginning. And so that's one of the early opportunities where we said, hey, we have our own data set and we have our own efforts for scraping filings and turning it into structured data. And that put us a little bit in a pole position to come out with something that doesn't really hallucinate, but that also doesn't just go and scans the internet if you ask it what the P ratio is of a stock, and it just looks at a 2 week old article. Like this actually is wired directly to market data, so it will just go and
Mhm.
find out from a real-time market source.
Got it. Got it. Okay. Thank you so much for doing this, by the way. Thank you to Rachel for setting this up. But yeah, we'll hopefully stay in touch and I'll keep you posted on this. Okay.
Yeah, absolutely. Thanks, man.
Awesome.
Appreciate
Awesome.
it.